How do you actually get a very accurate credit score? Now, I'm gonna show you guys something, right? I'm gonna show you this on my phone right here in real time. And so this is actually my credit score. This is from the Chase Credit Journey app, and it's saying I got a 752. I hope you guys can see that. And this is my Experian credit score. However, I'm gonna also go over to the Discover app and show you guys that here it says I have a 784 credit score, and this is my FICO credit score. So there's a difference here of around 30 points. Now, if you use Credit Karma or a bunch of these other apps, you're gonna always realize that they're not all telling you the same thing. They're giving you a bunch of different scores, and so how do you actually get to see what your actual credit score is? If you want to go out here and you want to purchase something, if I want to use my credit, which one of these credit scores is actually going to be used, because I don't know which one I should pay attention to. And that is why in this video, I'm going to break this down. I'm going to explain to you guys how you could get an accurate credit score and which one you should be using. Now, just before I break everything down, just a quick reminder, if you guys are new to the channel, my name is Eann, and on this channel, I talk about ways to make money, ways to save money, ways to invest your money. I talk about bank accounts, credit cards, side hustles, just about everything to do with personal finance. So if you like these videos and you like these types of topics, be sure to give this video a thumbs up. I'll really appreciate it. It's 100% free, won't cost you anything. Also, be sure to subscribe with the notifications on. That way you don't miss the updates of when I post new videos. And also, if you guys ever want to talk to me one-on-one, you can message me on Instagram. The link is down below in the description. But with that said, let's jump into how you can actually get an accurate credit score. So the first thing that you guys need to understand is that there are a bunch of different credit reporting companies. And so, for example, there's Experian, there's Equifax, and there's TransUnion. And then in addition to this, there's a bunch of different credit scoring models. So for example, you have the FICO scores, you have the Vantage scores, and depending on which scoring model is being used or which credit reporting company is being used, the score is going to be different because they all use a different model. Now, I know you're probably saying, well, Eann, which one should I pay attention to? Because I don't want to learn all this complicated stuff. And to make this very simple and very easy for you, the only one credit score that you want to pay attention to is the one that the lender that you're trying to work with is going to be using. So if you're going to be going out here and you're going to get, let's say, a credit card, and that credit card company or that bank is using the Experian credit score, then that's the one that you want to be looking at. And if you're going out here and you're trying to get like a personal loan or a car loan or a mortgage, and the bank or that loaning company is using your Equifax credit score, then that's the credit score that you want to be looking at. So the point is, you always want to pay attention to whatever scoring model that particular lender is working with. Now, sometimes the lenders may look up multiple scores and they may choose one, or they may average it, or they may choose the highest score. So your best bet, if you want to know what credit score you should be looking at, if you're trying to get approved for like a new credit card, a loan, a mortgage, you want to call up that particular lender and you want to say, hey, you know what, I'm looking at my credit and I want to be approved for this loan product. So can you tell me which scoring model or which credit reporting companies are you guys going to be using to determine my credit score? And then, for example, they'll tell you that, okay, we use your Experian credit score or we use your Equifax credit score, and then you know for sure that that's the credit score that you should be paying attention to. Now, getting a hold of each individual credit score is a bit hard because some of them are actually not free. You have to pay for it. But luckily, most credit card companies and banks will, or they already do, partner with these credit reporting agencies. And that way they can provide you the credit score for free. So just like how I just showed you guys previously or earlier on in the video, I didn't have to pay for my Experian credit score or to pay to see my FICO credit score. And I have unlimited access to these credit scores because Discover shows me my FICO and Chase shows me my Experian. So whenever I want to check my credit score, I can actually check the individual scores, even though they're different, and see what they are. And I can do this every single day, as now I have unlimited access and it's also free. So before you actually go out here and you start paying for a credit reporting tool or some kind of tool to actually show you your credit score or to show you all of your credit scores depending on the different models, instead, what you should do is first check with your credit card companies and your banks that you already have or that you already work with. because chances are they'll provide you with these credit scores and they'll do it for free. So it doesn't matter if you're banking with Chase, Wells Fargo, Bank of America, Discover, a local credit union, really doesn't matter. Chances are you still have access to all these different credit scores. And again, it's completely free. Now that's part one. That's for the credit score. The other side of this is your credit report. Now, your credit report is a long document or a long list that consists of all the loans, all the credit cards you have, whenever your credit has been pulled in the past, and just about all the info. And most people don't really check on this stuff, and it's actually not free. You have to pay for it, and it's not that expensive. It's gonna cost you like $20 to $30. But a good thing here is that you're entitled to one from each credit reporting agency for free per year, and that is actually a law. So what you can do is every single year you could pull these credit reports and you can look at them, and when you're looking at them, you're just looking to make sure that they all have the correct info. So you want to make sure that there are no accounts on them that you didn't actually open yourself and stuff like that. And to pull this off, it's also really simple and really straightforward. So what you guys want to do is you want to go to this website. It's called annualcreditreport.com, and here you can pull your credit report from Experian, TransUnion, and Equifax. And one thing that I will say here is that you need to be very careful when you're going to the site, because you don't want to type in annual credit report in Google search. You want to make sure that you type this in the URL bar, annualcreditreport.com, because if you type it in the wrong website, or you go to the wrong website, or you Google search this and for some reason you find yourself on the wrong website, you could actually be entering your information in a fake website, and it's going to capture your info and steal your identity. So you want to be very careful when you're trying to get your credit report online. So you have access to view your credit report, which you can get from this website. And then you have access to view your credit score with your bank or your credit card company. And this way you have access to both the credit report and your credit score for free. And again, it's not going to cost you anything. Now, let's say you start checking your credit score and you're checking a bunch of different scores, and you realize that your credit isn't as good as you thought it was, or maybe you want to apply for, let's say, a credit card or some loan or a mortgage, and you realize that the score that lender is going to be using is one that is really low, and so now you want to boost your credit up. Now, you can also pull this off for free. So here's the thing, right? Here is what your credit score is actually made up of. 10% of your credit score is new credit accounts that you open. 15% of your overall credit score is the length of your credit history, meaning how long you've had credit for. 10% is a mix of credit, meaning what different types of credit you have. Do you have revolving lines of credit, installment loans? And then 35% is your repayment history, which is the most, meaning that, hey, are you good with paying down your debts? Are you borrowing money and actually paying this money back? Because if you borrow money and you don't pay it back, then credit card companies and loan companies are not going to want to loan you money, because that probably means that you won't pay them back as well. Then 30% is the total amount that you have owed. So to have a really good credit score, all you need is 1, a good mix of credit accounts. 2, you need to ensure that you've been paying all your debts on time. And 3, you want to keep your utilization low, meaning that you don't want to be maxing out your credit cards all the time, because that is going to be a red flag. Now, your credit score can be anywhere from 300, which is really bad, to 800 or 850, depending on the scoring model that you're looking at. And if you have like a 600 or a 650 credit score, what you want to do is you want to start paying down any debts that you have. You want to ensure that you don't miss any due dates moving forward. You want to look at your credit report and remove any incorrect info. For example, if they say, or if that credit report says that you didn't pay off a credit card, or you missed a payment, or you were late, and that is in fact incorrect, you want to go ahead and you want to correct those errors. And then secondly, to build your credit up, all you need is 2 simple things. So first of all, you need a revolving line of credit, and then you need an installment loan. And this can be as simple as getting a secured credit card, or just even a regular credit card, putting a smaller charge on it every single month and paying that balance off in full every single month. And then secondly, you can get an installment loan. You don't have to buy a house. You don't have to buy a brand new car. What you can do is you can opt for a credit builder account, or you could simply go to like your local credit union. You can take out a secured personal loan of like $200 and then spread those payments over a year to 2 years and pay like $10 every single month. And that is going to help to boost your credit up. So the main thing is this: if you're trying to get a very accurate credit score, you're never going to see your credit score being the same on different credit reports. But what you should do is always find out from the lender first which scoring model they're using or they're going to be using to approve you or to give you your interest rate, and then from there you can go and check that particular credit score, and that way you actually have a very accurate credit score reading. So I hope this video clears up why you always see different credit scores when you use different apps, and I also hope this helps you to avoid paying to see your credit score or paying for credit reports, because this stuff is all free and you can actually access it for completely free. And with that said, thanks for watching, all the best with your credit, and I'll see you guys very soon in the next one.